If you're trading options, you're gonna lose money. If you haven't yet, then you will. I want to walk you through one of my recent losses and what I learned, and hopefully something that you can apply that can easily save you hundreds of dollars down the line and losses you should never have. It's just by checking this one simple thing that I forgot to check, and I'm gonna show you exactly how to do it in this video. But before we dive into that, let me walk you through the exact strategy I've been using that's helped me generate consistent return and then where I went wrong. Okay, so what strategy I use is called the 60-minute orb strategy or 60-minute opening range breakout strategy. So step one of this is you're going to wait 60 minutes when the market opens to determine the high of day. So we're looking at this day right here. And again, you can see here's a real trade log of SPX on September 17th, my trade log from Tastytrade. I lost $420 on this trade. So I just want to show you that the proof is there. I did lose money. Anyways, you can see here the market opened at 9:30 a.m. What I do is I wait 60 minutes. This way, I'm not getting caught in the early morning activity and price action, and I'm not worrying about what's going on there or getting my emotions too involved quite yet. Instead, I wait an hour. So I'll go all the way down here to 10:30, and this charts out the first 60 minutes of the day. So after the first hour has passed, I'm then going to look, what was the high during this 60-minute time frame. And this right here becomes my high of day. So once my high of day gets formed, what I'm going to do is I'm going to wait for the market to break above it. Once the market breaks above it, then that signals my entry conditions. So step number one is wait 60 minutes, chart the high. Step number two is trade the breakout. Now, how do I trade this breakout? It's a simple put credit spread strategy. That spells breakout if you can't read my handwriting. And then three, which again, handwriting terrible, we're going to do a put credit spread. This looks like doing a 1 DTE trade. So we're going to go out 1 day in the future with the contracts. We're going to sell the 30 delta contracts, and then we're going to buy $20 below, and this creates our put credit spread. I do this every single day whenever the opportunity presents itself, and it's helped me make a lot of money so far in the last few months. I definitely recommend trying it if you haven't yet. Now, where did I go wrong? The market ended up breaking the high here, so I entered, which you can see here, entering at 1:04 p.m. Central Standard Time, and then literally 11 minutes later, exiting the trade. And so that's how quickly it went wrong for me. Now, what went wrong? The problem was I traded during a huge economic news. It's called FOMC. If you never heard of it, it's the Federal Open Market Committee. And this is where they talk about interest rates, where they talk about everything that's going wrong with the money system right now in the US. And so because of that, it spiked up, got me in a trade, immediately spiked down. Volatility did its thing, expanded, contracted. And next thing you know, I was out in 10 minutes for a huge loss. And the reason why this happened was because I just should have been aware of this news and stayed out of the market during the time that happened. If you are trading SPX 1 DTE or 0 DTE, you should not be trading the market, at least your typical standard strategy, when FOMC is going on, when this meeting is happening. Now, if you're trading with the direction of FOMC because you like scalping, that's a different story. But your normal average strategy should not be deployed. Now, how do you know what's coming up? You can go to federalreserve.gov, sorry, said that wrong, /monetary policy FOMC calendars. And it shows it right, click back, let's go back. Right here, and it shows all the meetings. Again, make sure you show it for 2025, the year that you're on. You can see here, September 17th, this is when I placed the trade, was that meeting. Now, you can also look at future dates, October 29th, December 10th. These are going to be days you should not be trading a normal strategy on SPX. There's going to be a lot of volatility towards the end of day. This was a super beginner mistake. I tell people to watch out for this, but I personally didn't look out for it myself. So again, make sure you're watching this because this could have easily saved me $420. Anyways, as always, I'm here to help you learn options, know options, deploy the best strategy. That includes learning from both winners and losses. So I hope you enjoyed this video, and I'll see you in the next one.